Thank you for joining us today for the ESG Ratings UK's Midcap review by EthiFinance. We'll give it maybe one more minute just to make sure that some of the latecomers can join in, but I believe we have quorum already, so let's get started. So as a housekeeping note, this session is being recorded, should take an hour, and have room for questions and answers at the end. As most of you on this call probably have read or seen over the last years, there has been an increased focus on extra financial analysis and communication by both asset managers, asset owners, and corporates. This is either the result of regulations, stewardship, or a focus on better transparency. Either way, it has more and more importance as an input in decision-making across the financial and corporate ecosystem. EthiFinance as a group covers a broad spectrum of activities across the financial and extra-financial sphere, in both credit and ESG, through ratings, research, and advisory services. Today's topic is focusing on a specific subset of our activities. I like to call it the visible part of the iceberg, as it is about our listed equities coverage. EthiFinance has been doing ESG analysis since 2004 on listed equities, focusing on small and mid caps, and has been conducting extensive research on this field. Hence, we're excited to share with you our latest findings focusing on listed UK mid-caps. Our goal is to provide investors with a reliable and objective measure of a company's ESG performance, allowing all parties to make informed decisions that align with their values and criteria. We hope this will be informative to the mid-cap issuers and investors alike. Today, I'm joined by Camille Ferron, Head of ESG Ratings, who will be sharing more about our methodology, and we'll also have Emmanuel Delaville, the founder of EthiFinance, who will be giving us an overview of the company's vision and mission, as well as the ESG rating distribution of UK's mid-cap companies. As for myself, Yannick Breuer, as EthiFinance's first UK-based employee, I'm thrilled to be part of this team and to share our research with you. Without further ado, let's explore the ESG landscape through the UK's mid-cap space. First, Emmanuel, could you tell us more about EthiFinance's ESG origin and where the group is at today?
Yes, thank you, Yannick, and hello, everyone. I'm delighted to be speaking with you today, and that's for two reasons. A personal one, I love Great Britain, as I spent many years there in the banking and finance industry. And the other reason is that I made a very important decision back in 2001 to answer your question. The foundings, the reasons behind EthiFinance started with a scandal back in 2001 with Enron scandal, this large energy trading company that went bust. The Securities Exchange Commission, the credit rating agencies, all of us were accused of negligence and overlooking some of the massive governance issues. And that scandal has ruined many pension funds and hundreds of thousands of people's savings. So that's when I realized, really, us in finance, we were far more, too much focused on the financial dimension and not enough on non-financial information. It also coincided at that time when the climate change started to begin as a serious issue, and businesses, likewise in finance, we were not taking that into account. So that's when I decided then to come back to France and set up EthiFinance, a company dedicated to the assessment of non-financial matters. That's in a nutshell, really, the trigger for setting up this ESG rating agency, Yannick. And today, we are, I would say, a European player. We want to become the reference of what is called in Europe and quite unique concept of double materiality, and I will come back onto that in a second. As you can see on this logo there, you should see my pointer. The ESMA means that part of our activity is controlled by the European Securities Market Association. So, which shows again that we are a rating agency as such. So we do credit rating, we do ESG, so non-financial rating and financial rating. And likewise, we have some advisory services on financial and non-financial dimensions. that's in a couple of words of introduction about us. Here, of those key figures for ETI Finance, we have 160 people servicing over 350 clients. Our clients are they are asset managers, asset owners, but also issuers. And we are, as you can see, very well over the past 3 years. We were 3 years ago, ETI Finance was only in France, and now we are delighted to be in Spain thanks to the acquisition of a credit rating agency in Madrid and based also in Granada. And I'm delighted to have on board ESG Rating, which was acquired 6 weeks or 2 months ago. ESG Rating is a absolutely fabulous ESG rating, very well known, 25-year-old agency based in Hanover. So we are experiencing strong growth, and we, as I said, we are now ready for Europe, and with different brands. You have on the rating side the ETI Finance ratings for the credit side, and the ETI Finance ESG rating on the non-financial rating side. What was used to be known the Gaia, but we've changed the names now, and there is only one brand, ETI Finance. And then you have on the research and development side, Spread Research, very well known as well when we merged with them back in 2017, and Analytics, which is the fruit, again here, of an acquisition of risk modeling people. So in a few slides, just to introduce and show you how committed we are to become this independent, truly European double materiality agency. That's it. So now we can move on maybe onto the what matters to us is the ESG rating, Yannick, and our coverage. We cannot hear you.
Yes, exactly. The mute button, the usual things that happen with Zoom calls and so forth. Anyway, so thank you very much, Emmanuel, for the group overview. Now let's get an idea of our equities mid-cap coverage. So at the moment, we cover around 2,300 stocks. The basic rule to be included in our unsolicited universe is to have had a market cap between 150 million euros and 10 billion euros over the past 3 years, be listed in Europe, and have a free float of 75%. However, as a side note, we have also expanded and continue to expand into large cap at the request of asset managers. And at the other end of the spectrum, in the smaller capitalizations, we have included other stocks on a solicited basis, either through the pre-IPO corporate services or at the request of the issuer. And as you will note in this slide, there was in the UK, we're rating around 500 to 523 UK corporates. Now that we have identified the mid-cap universe, perhaps, Camille, you can tell us more about the process and the methodology.
Yes, thank you, Yannick. Actually, in ESG ratings, we collect data on over 2,300 European stocks, as you said. So this is our rating process. So first we start with a phase of data collection from the company's public documentation. Then we have a first phase of quality check. Then a very important step for us is the dialogue phase. So during which we give access to every company we cover to our online platform, where they can fill in the questionnaire. And during this phase, they have a direct access to one analyst in my team. So it's a really personalized approach. And then we have a final consistency check, and we homogenize the data. This is what I want to emphasize also is that although our main product is ESG scores and ratings, so focusing on the company's practices and quite sector agnostic, we also have other lines of research focusing more on the activities of the companies we rate. For instance, we screen them for their involvement in activities contributing positively to the Sustainable Development Goals defined by the United Nations. And we also screen for controversial activities, such as involvement in controversial weapons, fossil fuels, tobacco, etc. In addition, we have a controversy research where we look for all the news affecting negatively, all the information affecting negatively the companies we cover. I will say a word on that a little bit later. So about the methodology itself, regarding ESG scores, this is our standard framework. So we have 4 main themes that we assess. Governance, with indicators on the composition of the board of directors, business ethics, or also on the management of CSR issues at company level. We then have the environmental theme, with indicators on the overall environmental policy, and also more specific issues such as energy and greenhouse gases, water, waste, and biodiversity. Then at EthiFinance, the social pillar is split into 2, actually. One focusing on internal stakeholders, so basically employees, where we look at working conditions, training and skills development, equal opportunities, and also health and safety. And finally, we also look at external stakeholders, so mainly clients, suppliers, and also the general public. So we have 3 types of indicators in our scorecards. So first, we look at the policies that the companies are implementing, if they have set themselves targets, for instance. Then we look at measures that have been put in place to answer to the various ESG issues. And finally, we also have quantitative indicators which show the results of the company's efforts regarding those issues. As I said, our scorecard is rather sector agnostic for now, since we only have 3 macro sectors, so industry, distribution, and services, for which we slightly customize the questionnaire, since, for instance, the environmental part is a little bit overweighted in the industrials macro sector compared to the other 2. Additionally, we also collect some indicators that are not rated but can be also provided to our investor clients, namely indicators on the European Green Taxonomy. We also have estimated carbon data. And as I said before, indicators on the activities of companies, so either positive or negative ones. So if we dig a little bit into the scoring system, so I'll be quick, we have several scoring logics for our indicators. So most indicators are scored. So either on transparency, for instance, do they have a publicly available CSR policy or not? So in this case, we really rate the transparency of the company. Then other indicators are rated according to their trend over the past 3 years. For instance, regarding carbon data, we look at the trend of the carbon footprint, of the carbon intensity, more precisely, over the past 3 years. For other indicators, we define some performance thresholds. Finally, some indicators are rated as bonuses, so can grant additional points, but companies do not lose points on these indicators. This can be the case, for instance, for small companies, if I take Scope 3 emissions in the carbon footprint, which can be quite tricky to compute. So we do not require companies with less than 500 employees to disclose this indicator. So if they don't, they will not lose points. But if they do, they will gain additional points. So the way indicators that are scored depend on the size of the company and also on the macro sector, as I said before. And then all these scores are aggregated at sub-theme level and theme level, and then we have an overall score.
Indeed, and you do have an overall score, achieve a score over 100, and as obviously the footnote is that is the overall score without the controversies, and you've touched upon that before, and I know we have a lovely slide thereafter to cover a bit more and tell me more about the controversies then that you do.
Yes, exactly. Thank you, Yannick. Sorry. I thought I was going to sneeze.
Okay.
Sorry about that. Regarding, so indeed, we also have a look at the controversies, so ESG controversies that the companies face. So these are, as I said, information that can impact negatively a company. So in our process, we have a partnership with an AI company called Sesame. They provide us a list of articles, actually, each on a monthly or weekly basis, on which they apply a pre-qualification score. So there is a virality score and also a negativity score. And so these two scores help us to filter the news that will be relevant or not. Then after that, my team of qualitative analysts arrives and has to analyze all these news and to so first identify which are really relevant and to gather them into events, and then the different events through times can lead to one controversy. So for instance, an event can be there is an investigation at company X, and then 6 months later there is a new like a raid at the office on the same matter. So these two events, which are 6 months apart, will give birth to one controversy. So this slide shows how we then assess each controversy. So we have 3 dimensions. So first, we will look at the impact on the company. So the impact can be first financial or operational. For instance, if there is a huge fine on the company. It can also be reputational if a lot of newspapers or a lot of media spread the word that there is a scandal on the company. Then, as Emmanuel stressed, we look at double materiality. So we also look at the impact of the controversy on the impacted stakeholders. So here we have a look at first the volume, the number of stakeholders that are impacted. So is it one isolated person, or is it, for instance, a huge pollution issue which affects a wide area? We also look at the intensity of this impact. So basically, is it easily reversible? Is it just a money issue? Or were there human damages or things that are complicated to restore to their initial state? And thirdly, we also look at the level of responsibility of the company, which is first the legal impact. Is there a lawsuit? Is there a condemnation or not? And second, what's the level of involvement of the company? Is the top management accused of misconduct, or is it an event that happened in an isolated subsidiary or in the supply chain? And in this case, the responsibility can also be more indirect. So we also analyze the answer of the company to its controversies. So if we consider that the company has put in place or implemented relevant corrective measures, this can lead us to choose to lower the score. We have an internal committee that meets monthly and also has to decide on the highest controversy scores. So yeah, we follow this up quite closely. And you also have to know that the overall score of the controversy gradually decreases over time. So as it gets older, the older it gets, the less severe it gets.
Perfect.
Yeah. So this gives the output is a controversy severity score from 1 to 5. Then this is aggregated at company level. So this depends on first the highest, the most severe controversy that the company has. So if one company has one critical controversy, its overall exposure will also be critical. And then it also depends on the number of controversies that the company faces. So if they only have not significant controversies, but they have 50 of them, the overall score at company level will go up by 1 level of scoring.
Perfect. Well, thank you for the overview of the controversies, which obviously is something that affects scores, but also affects financials and equity prices as well, and so forth. But I guess to recap, overall, there's the general structure of the scores. And I think what I take away from all this, Camille, is that indeed, so we do update, or you do a review annually on the companies individually, but then you do affect the score on the basis of the controversies you just mentioned. Is that correct?
Yes, exactly, Yannick. That's how it works. Since companies usually publish their CSR report annually and update their ESG data annually, these are also updated annually in our scorecard. However, we do a quarterly update of the controversy scoring to have the most up-to-date score as possible.
All right. Okay. Well, thank you very much, Camille, for the overview of the methodology. You can sneeze and have a glass of water for sure. I will be turning back to Emmanuel, and obviously, perhaps you can tell us more about the UK Midcap companies you've rated and how they actually fit in and so forth.
Yeah, of course. So let's get to the core of this webinar and about Great Britain and the UK company profile. How do they look like? Here you have a graph. I'll take you through, but we're talking here about 498 listed corporates in the United Kingdom with a market cap from 150 million up to 10,000 million. So this slide describes the scope and variety of those 498 listed companies that we've rated IT Finance over the past 3 years. So you can see two graphs. The one to the left is about UK only companies, and the one to the right is a comparison of British companies versus the Eurozone peers. Both charts are showing that there is, in terms of market caps, both the UK and the Eurozone are very similar, but you can see a big difference in terms, big or significant difference in terms of means of sales and headcount. And the reason lies behind this square, them at the bottom left of this slide, where you can see the proportion of businesses across 3 macro sectors: services, industry, and distribution. And here you can see that in the UK, there is a greater proportion of companies involved in services compared with their peers in the Eurozone. So that gives you a flavor of the scope of those listed companies. And maybe now, shall we move on to some
Exactly.
first results? Yannick?
Yeah, sure.
Yeah.
So, very, very briefly here. So, what we have done is to, and what you can see on this slide is you see the evolution of scores achieved by UK's mid-cap companies over the past 3 years. And as Camille has highlighted before, scoring is based and mostly on transparency and on reported data or data that we managed to get through the dialogue phase as well. And we can see indeed an increase across all the pillars. And this is mostly driven by an increase in regulation, oversight from investors or even corporates alike in terms of communication. And as a result, we see them evolving positively. Perhaps one of the side notes is that the governance appears to be the strongest pillar across the UK companies, if you compare to the other ones, and the social one slightly less high, because again, it's more about the communication that's being done on those various pillars across the board. So, and actually, since I've touched upon the dialogue phase and the importance of data, perhaps Emmanuel, you can share a bit more regarding the importance of the said questionnaire and dialogue.
Yes, thank you, Yannick. Dialogue is very important to us, and that's probably a key difference with other ESG rating agencies. We believe that we have the most qualitative ESG data and scores on small and mid caps across Europe, and that the reason why is that with many of those companies across Europe, we discuss. Camille's team job is to dialogue, to engage with companies and have the most relevant and reliable information on this, and you see it pays off. That's what I want. My message really is probably the most rewarding tip of advice for any corporate representatives present on this webinar. Indeed, this bar chart, as you can see, when you engage with ET Finance, you get a 30% return on your investment, because you can see that the score of those companies engaging with us, they reach 51 points versus 40 for those who don't engage with us. So it's a very nice upside for a modest effort, I would say. So the other thing I wanted to say regarding the dialogue impact, it is the importance of publishing information and accepting to have a discussion with the ESG rating agency. So now that's been mentioned quite clearly, hopefully.
I think everybody got the message that indeed, and I think it's one of the key takeaways as well, is that we will not invent data on behalf of any of the companies that we monitor. Is that it's either through what is being published and reported, or through what is available through the questionnaire or the dialogue phase, which is obviously and has an impact. The more you tend to disclose, the more transparent you are, the higher the score. So that's, I think, one of the key takeaways. Perhaps
just to finish on that, what you're right, and I'll insist upon that, is that no information for any agencies is no point. So no point, you don't get any points. So even the slightest information will help you. So that's my call to corporate representatives today. Okay. So roll of drums. Who are the top 10
well,
in the UK?
To some extent, indeed. So here we have what we see as, based on our scoring methodology, the top 10 most highly rated companies within our universe in this mid-cap in the UK. And what is probably most noteworthy is that half of those are in the construction and real estate sectors. And these tend to communicate, again, back on the point of both Camille and Emmanuel, they communicate better given their own impact and requirements in terms of communication, impact on the environment and so forth. And so that's one key takeaway. Also noteworthy, and indeed, again, was touched upon by Camille, was the fact that we are sector agnostic. So perhaps some will be impressed or surprised to see that there are some oil and gas companies who are also scoring fairly high within our methodology. And finally, also another noteworthy point is that regardless, even in terms of sales, so in terms of bigger firms or smaller firms, so 7 out of these 10 have lower sales than the UK median that we have actually evaluated. So this is the key top 10 takeaway from our universe and our methodology. Perhaps we'll have a quick glance at the 3 various pillars. I'll pass it back on to you, Emmanuel, for maybe some further notice on some further corporates.
Okay, so let's talk about governance, corporate governance, and we've got 2 leaders there, Zote Foams PLC, a foams manufacturer, and Henry Booth, the land and property manager. They've scored the highest in England, well, in Great Britain, sorry. And the reason is that they've performed very well on those 5 factors showing here. So if I just take a couple of them, they must have done very well in terms of board composition. It is important. That means the separation of the roles of CEO and chair of the board, for instance, or the proportion of independent non-exec directors, as well as gender diversity at board level. We also want to see, when we say operation of governance bodies, they must have implemented some very good practices across the board. We ask with Camille, we say, how many times you've met, and how truly were they present? So what is really the attendance rate? On which committees does the board delegate some of its responsibilities, be it in nomination, remuneration, audit, risk management? That's the type of questions we want and answers for. And does the board and its committees, for instance, participate in annual self-assessment and try to identify their strengths and weaknesses? So all these criteria are taken into account for assessing the governance, and obviously business ethics. It's not just code of conduct, but how many people were trained? What's the proportion of people across the world being trained on code of conduct? Is there any whistleblowing procedures in place? And finally, yes, how serious do you take CSR? Is that just a sales gimmick, or is that central to your strategy? So obviously those companies, on what they tell us, we are not an audit company. We cannot certify, but we are saying that based on the information they've provided us with, they've scored the highest, as I said, those 2 companies on corporate governance. But there isn't only the G. We love to talk about the S as well.
Exactly. Thank you very much, Emmanuel. So very briefly, in a very similar fashion, so here based on human capital or the social aspects within the ESG scoring. So we find here 2 companies, so RWS, the Intellectual Property Translation Group, and Assuria, a REIT, designing, building, managing GP surgeries, and they've scored well across their HR policies, the working conditions, health and safety. And what is perhaps most noteworthy in this example is you see the size of the company in terms of full-time employees. So whether you're a larger or a mid or large mid cap, or whether you're a smaller player or smaller employee basis, you can still score very high, depending indeed on the various criteria that we look out for. So skills development, equal opportunities, health and safety, and so forth, which are also points that Emmanuel touched upon. And I think finally, the more important one that everybody is focusing more slightly on, which is on the environmental side of things. Perhaps we can show those.
Yeah, of course it is. Yeah, we all think, everybody, when talking about sustainability, we all think of the E and, the environmental, but we all know it's all those other dimensions do matter as much. So we'll end up with this session on the on the environmental pillar, and we have here two quite large companies, Shaftesbury, London real estate company, and Up Global Sourcing, homeware brands, including a well-known brand called Salter in the UK. So what have those companies done better than the others? I think they must have definitely published their policies in terms of environment. That means I'm aware and I have a policy saying that I have an impact on the environment. That's the dimension of policy. Then, as you know, we measured systems and performance, but they must have demonstrated as well. They've implemented systems to follow up and reduce their greenhouse gas emissions. To likewise for water, for waste management, and they must start thinking about this, I would say, quite new topic, but that will definitely increase, even though Great Britain is unfortunately not part of Europe, but Europe is keen on biodiversity, and I'm sure British people too. And it shows that those companies have also started to think and handle that biodiversity challenge. So this basically concludes our best performance sequence
Exactly.
for the United Kingdom. How does it
Compared
compare
to
with
the
the
rest of Europe.
Eurozone, Yannick?
Indeed. So thank you so much, Emmanuel. So for those various pillars overview, and you have mentioned indeed that the UK and Europe, and we always tend to compare within each other's universe and so forth. I think what is most noteworthy is that overall within the universe that we score, so the ESG scores are aligned between the UK and Europe, but the two noteworthy points that we like to point out is that, first of all, and that was also noticed as to where UK companies score the highest in the previous slide, was that on the social score, it appears that due mostly to regulations and various communications by European-based companies, there's more information and data that is being provided on the social aspect of things. And at the other end of the spectrum, what we like to note is indeed on the governance side of things. We always say that the UK has probably one of the strongest governance methods and sectors overall, and as a result is also reflected within the overall score if we compare, let's say, UK companies that we cover as well as the rest of Europe. So I think this is the overview that we wanted to give and to provide. And obviously, we had mentioned that we would have time for Q&A. We have about 20 minutes left. You should see in your right-hand side panel your chat pod, as it's called, and you should be able to answer any questions that you may have. So thus far, we don't see anyone, let's say, coming in. Nevertheless, hopefully we'll see one or two popping up in a few moments. But
what I wanted to say on the social was I can see people writing, starting to write questions. So let them finish. But yeah, on the social side, I think there is a greater tendency in outside the UK maybe to publish a bit more information on the human capital. So that's why I would. It doesn't mean obviously practices are not as good as in the Eurozone. It just probably means a lack of information published by those UK companies on human capital. Okay. So I'll take this one. Thank you for asking. What was the main advantage of our agency compared with our competitors? I'm happy to take this one. I would say, well, first of all, we are specialists in small and mid-sized listed companies across Europe. Nobody else has got the depth and understanding for the past 20 years of that segment of the market. Most, well, I would say all other ESG rating agencies are focused on the largest market caps. That's the first difference. The second one has been mentioned by Camille during a demonstration or explaining our methodology. I mean, we're quite unique in the sense that we do engage with a lot of companies across Europe, so we know them. Most of our analysts are not just people browsing through PDFs and websites. You know, they often are on the phone or visio now with CFOs or ESG specialists or CSR directors, managers. So and that makes a difference because we understand and have a much deeper information ratio than the other agencies. That's what makes us different.
And I would just like to add, because this particular webinar has been focusing, as I had mentioned at the introduction, what is the visible part of our activity. You have to also think that within ETHI Finance as a group, we also have activities that are involved in the ESG scoring and the in terms of privately held assets, private equity, private debt, and so forth. Obviously, we can share less in the public webinar on that, but we'd be happy to obviously elaborate on those points, as well as advisory to asset managers and so forth. So this is just a small part or subset of what we do as a group within the ESG sphere. There are other services and so forth where we can elaborate on and perhaps also mention more what we do compared to others.
Okay.
Yeah, I still see someone typing and so forth.
How do you see the EU taxonomy evolving going forward? And another question is coming. On the EU taxonomy going forward, is the UK going to align with it? That's a good one. That's a good question. I believe England will have its own rules, obviously, and but that's only me talking, not on behalf of ET Finance, but I would say definitely yes, they will align. Well, not align maybe strictly with the taxonomy, but it was something very similar to. It's like exactly. You know, those. I don't know if you agree with me, Yannick. It's like
yes.
Those.
So my experience so far, whenever I've had also seminars and so forth with people within the regulation in the UK side of things and so forth, is that the tendency is to go similar, but as I like to say, is the bit the main source or the local flavor, let's say, to the UK. So, and I've been aware of asset managers working in work groups as well, whereby EU taxonomy is obviously not of relevance for certain asset managers when they do assess companies. However, they are working on something that would be similar, but not exactly the same. It's not going to be a copy paste for sure.
Okay. So questions are pouring down now. So I think we've answered that one. The coverage and whether we will extend our coverage. That's a good one. We are investing in increasing our coverage to include more large caps. In actual fact, from this year, by the year end, maybe Camille, can you tell us which indices will you cover if you're there? Otherwise, I can say.
Yes. No, I'm here. It's not really about indices. It's just, as Yannick said, our historical coverage stopped at 10 billion euros. So the idea is to just rate everything that's listed on developed European stock markets.
Yeah.
And above, also above 10 billion euro of market cap.
Okay.
Indeed.
So we'll cover the main indices, the main European indices.
Yes, so we'll cover the FTSE 100. We'll cover probably the DAX 30, the IBEX 35. So
Indeed.
yes, we're going to be integrating some larger listed companies.
All right. See the question here. Back to the score and data generated itself. What is the various usage for asset managers or for the company? So I'll just start on that, but probably Emmanuel and Camille can elaborate as well. So there are two sides of it. Is that first for asset managers, either they look into our scoring methodology and get access to the scores themselves, or they are interested in gathering the data that we have available. So they plug it into their own data lake to enrich them so that it covers the SMID caps that we do cover. And they're obviously looking for further data and further analysis that we're able to gather through the dialogue phase or other means, just because we are focusing on the SMID caps, but expanding as well at the moment. So that's on the asset management side, but also they are keen to look into just purely looking at the controversies methodology or the controversies news that we're able to gather. But then sometimes they will put in their own recipes in terms of scoring, because certain asset managers have developed their own methodology as well. But the data as an input is key, or is fairly important. So that's on the asset manager side of things. At the other end of the spectrum, corporates, if you look at what has been also going on for other split caps that we cover, is that some of them will actually communicate on their score as well. Certain corporates will actually use their score even for internal purposes in terms of either compensation or communication and so forth, or set it as a goal, as a KPI for management to actually enhance their score within the ESG Finance score and so forth. So it's both sides really in terms of what is that can be done and so forth. So it's not just here's the black box and here's the score and here's our output. There are various steps and various parts of it that can be used for both asset managers and corporates alike. I don't know if Camille or Emmanuel, you'd like to comment on that?
No, I think you're right. People using our services are either they want raw data, a maximum of data on new corporates. So that's for the most or probably the largest financial institutions. They have their own ESG scoring methodologies. Yes, as you said, and so they will need just data. But the great majority of our clients, they want data as well as scores, and they want to have full transparency on the scoring methodology. That's why we this afternoon wanted to start straight away with that, because we want to be transparent. We want those methodologies to be robust, to be totally understandable by anybody, and that's why we are pushing for regulation of the ESG market. We would like to have a greater transparency on methodologies for any players, and that's we know that regulation is on its way, and we are welcoming it. Yeah. Okay.
Well, I don't see anyone typing away, and we're approaching the end of the webinar. So I guess I'll just give you my 2 cents on this. So as we wrap up today's webinar, I'd like to thank Camille and Emmanuel, and obviously our participants and the people who ask questions as well. We hope you've gained valuable insights into ESG Finance's ESG rating methodology and our findings on UK's mid-cap companies. And as you have seen, analysis has shown that there's a growing awareness and implementation of ESG practices in the UK's mid-cap sector. Many companies demonstrating strong and growing performances across the various ESG criteria. And so we hope you found this presentation informative and insightful. At ESG Finance, we're committed to providing ESG ratings that are robust, transparent, and aligned with the needs of our clients, so be it corporates or asset managers. And if you have any further questions or would like to learn more about our services, away not just from the ESG rating space, but other services, we would be happy to offer you a free trial and a presentation of our various services and of ESG ratings. So thank you for your attention, and we look forward to hearing from you.
Thank you all. Thank you, Yannick.
Thank you. Bye.